Welcome back to Raggedy Ass Rich, where we talk real about money and wealth building. I'm your host, and today we're diving into something that everyone needs but nobody wants to pay for: insurance. What you actually need, what's a waste of money, and how to not get ripped off. Let's get into it. Alright, so let's just start with this. Insurance is one of those things where you're paying for something you hope you never have to use. And that makes it really easy to either skip it entirely, bad idea, or buy way more than you need, also bad idea. So today, we are breaking down the different types of insurance, which ones you actually need, and which ones are just ways for companies to take your money. Let's start with the most important one: health insurance. This is non-negotiable. I don't care how young you are. I don't care how healthy you are. I don't care if you never get sick. You need health insurance because one accident, one emergency, one unexpected illness can financially destroy you. A broken arm, $2,000 to $10,000. Appendicitis, $15,000 to $30,000. Heart attack, $50,000 to $100,000 plus. Cancer treatment, hundreds of thousands. Without insurance, those costs fall on you. And most people don't have that kind of money. So yes, health insurance is expensive. But medical debt is worse. How to get it? Through your employer, usually cheapest, through the health care marketplace, through Medicaid if you qualify based on income. And if you're young and healthy, get a high deductible plan with an HSA, health savings account. Lower premiums, and the HSA is a great way to save for medical expenses tax-free. Next, car insurance. If you own a car, you need car insurance. In most states, it's legally required. At minimum, you need liability coverage. Covers damage you cause to others. But you might also want collision coverage. Covers damage to your car in an accident. Comprehensive coverage covers theft, vandalism, weather damage. Uninsured or underinsured motorist coverage protects you if you are hit by someone without insurance. How much coverage do you need? The minimum your state requires might not be enough. If you cause an accident and the damage exceeds your coverage, you're on the hook for the rest. So, here's the rule. Your liability coverage should be high enough to protect your assets. If you have $50,000 in assets, home equity, savings, investments, you should have at least $50,000 in liability coverage, preferably more. As for collision and comprehensive, if your car is old and not worth much, skip them. If your car is new or valuable, keep them. Do the math. If your car is worth $3,000 and your deductible is $1,000, is it worth paying for collision coverage? Probably not. Next, renters and homeowners insurance. If you own a home, you're required to have homeowners insurance. Your mortgage lender requires it. If you rent, you are not required to have renters insurance, but you should. Here's why. Renter's insurance covers your personal belongings if there's a fire, theft, etc. Liability if someone gets hurt in your apartment. Temporary housing if your apartment becomes uninhabitable. And it's cheap, like $10 to $20 a month cheap. So if you rent, get renter's insurance. It's one of the best deals in insurance. Homeowner's insurance is more expensive, usually $1,000 to $2,000 plus per year, but it's necessary. Make sure your coverage is enough to rebuild your home, not just the market value. Now let's talk about life insurance. Do you need life insurance? It depends. If you have people who depend on your income, spouse, kids, aging parents, yes, you need life insurance. If you died tomorrow, would your family struggle financially? Would they be able to pay the mortgage, cover living expenses, pay for your funeral? If the answer is yes, you need life insurance. How much? A general rule, 10 to 12 times your annual income. So, if you make $50,000 a year, you'd want $500,000 to $600,000 in coverage. Now, there are two main types of life insurance. Term life insurance covers you for a set period, 10, 20, or 30 years. Whole life insurance covers you for your entire life and builds cash value. For most people, term life is the way to go. It's way cheaper than whole life, and for most people, you only need life insurance while you have dependents. Once your kids are grown and your mortgage is paid off, you don't need as much coverage. Whole life insurance is often pushed by insurance agents because they make huge commissions on it. But for most people, it's not worth it. Term life is cheaper, simpler, and does the job. Now let's talk about something most people don't have, but probably should. Disability insurance. This covers your income if you become disabled and can't work. And here's the thing. You are more likely to become disabled than you are to die during your working years. So, if your income is your most valuable asset, and for most people it is, you should protect it. Check if your employer offers disability insurance. Many do. If they do, sign up for it. If they don't, you can buy an individual policy. It's not cheap, but it's worth it. Look for long-term disability insurance, covers you for years or until retirement. Coverage that replaces 60 to 70% of your income. A policy that covers you if you can't do your specific job, not just any job. Alright, now let's talk about insurance that's usually a waste of money. Insurance you don't need. Number 1, extended warranties. These are offered when you buy electronics, appliances, furniture, whatever. Would you like to add a 3-year extended warranty for $199? No. No, you would not. Here's why. Most products already come with a manufacturer's warranty. Most extended warranties have so many exclusions that they're useless. Most products either break right away, covered by manufacturer warranty, or last way longer than the extended warranty. Extended warranties are huge profit makers for retailers because most people never use them. So skip them. Save that money. Insurance you don't need. Number 2, credit card insurance or payment protection. This is insurance that pays your credit card bill if you lose your job, become disabled, or die. Sounds good, right? Wrong. These policies are expensive relative to the coverage, and they're full of exclusions. You're better off having an emergency fund, having regular life and disability insurance, just paying off your credit cards. Insurance you don't need. Number 3, rental car insurance. If you already have car insurance. When you rent a car, they always try to sell you insurance. But if you already have car insurance, your policy probably covers rental cars. Check with your insurance company. Also, many credit cards offer rental car insurance as a perk, so you might already be covered twice. Don't pay for insurance you don't need. Insurance you don't need. Number 4, life insurance on your kids. I know this is a sensitive topic, but life insurance on your children is usually not necessary. Life insurance is meant to replace income. Children don't have income. The exception, if you want a small policy to cover funeral expenses, that's understandable. But those big whole life policies for kids, not necessary. You're better off putting that money into a college savings account. Insurance you don't need. Number 5, cancer insurance or disease-specific insurance. These policies only pay out if you get a specific disease. But if you have good health insurance, you're already covered. These policies are expensive and very limited. You're better off having comprehensive health insurance. Alright, so how do you save money on insurance you do need? Tip 1, shop around. Don't just stick with the first quote you get. Get quotes from multiple companies. Use comparison sites like Policy Genius Life Insurance, the Zebra Car Insurance, Healthcare.gov Health Insurance. Prices vary wildly between companies. Shopping around can save you hundreds or even thousands a year. Tip 2, bundle policies. Many insurance companies offer discounts if you buy multiple policies from them. Car plus renters, car plus homeowners. Ask about bundling discounts. Tip 3, raise your deductibles. The higher your deductible, the lower your premium. If you have an emergency fund, you can afford a higher deductible. So instead of a $500 deductible, choose $1,000 or $2,000. Your monthly premium will drop significantly. Tip number 4, ask about discounts. Insurance companies offer discounts for good driving records, good credit scores, safety features in your car or home, being a homeowner, paying annually instead of monthly. Ask what discounts you qualify for. You might be surprised. Tip number 5, review your policies annually. Your insurance needs change over time. Maybe your car is older now and you don't need collision coverage anymore. Maybe you paid off your house and can adjust your coverage. Maybe you got a raise and need more life insurance. Review your policies once a year. Make sure you're not overinsured or underinsured. Alright, let's wrap this up. Insurance is not fun to think about, but it's necessary. Here's what you need. Health insurance, non-negotiable. Car insurance, if you drive. Renters or homeowners insurance. Life insurance, if you have dependents. Disability insurance, if your income is your main asset. Here's what you don't need. Extended warranties, credit card insurance, rental car insurance if you're already covered, life insurance on kids, usually, disease-specific insurance. And to save money, shop around, bundle policies, raise your deductibles, ask about discounts, review annually. Insurance protects you from financial disaster. Don't skip it, but also don't overpay for stuff you don't need. That's it for today's episode of Raggedy Ass Rich. If this helped you understand insurance better, share it with someone who needs to hear it. That wraps up this episode. Until next time, keep building, keep protecting your assets, and remember, insurance is boring, but bankruptcy is worse. Peace.